I look at the risk and reward offered up in both investments and speculations, and I gear myself to what I see as the relative risk-related returns offered up on both sides. For the last 3 years, given what I saw as ludicrous overvaluations in the junior sector, I found myself being more of an investor than a speculator. If I thought, as an example, that Exxon could double or triple, why would I care too much about amalgamated orangutan petroleums? Now we're in a circumstance where what I see is the best of the juniors, that's sort of 150 out of 3,000 companies worldwide, that I see as the best of the best in the sub 250 million market cap space. Now that I see those stocks haven't fallen 50 or 60%, I find myself drawn much more to speculation. So I'm willing to go, if you will, risk on in a world where most of my competitors have gone risk off. Certainly names I've been buying include Sovereign Metals, really, I think, amazing rare earths, rutile, and graphite discovery in Malawi, a place that, by the way, has some real risks. No. I would suggest the Lundin vehicle, Africa Oil, is pathetically cheap. I think it's selling at half the price of their Nigerian assets. You get the Kenyan discovery for free. You get a direct and indirect participation in a world-scale discovery in South Africa and a separate world-scale discovery in Namibia for free. And you get it in the Lundin wrapper. I continue to be attracted to an Australian-listed name, Centaurus, which has what I believe to be a potentially tier one, it isn't yet, a potentially tier one nickel, platinum, and palladium discovery in Brazil. But those, I've just given you ones that I've been buying recently. The junior universe has gone from universally uncompelling to universally attractive. If you have me on 6 months from now, which I hope you do, I think the big change between that interview and the next interview is that I will have likely allocated between $5 and $10 million personally to private placements in juniors. This whole flow of funds away from the juniors that we are seeing is presenting an opportunity. Many juniors played chicken with capital markets, thinking their share prices would rise, and they could raise the capital that they needed with less dilution. And they lost the bet. They're going to have to raise the capital, and they're going to have to raise capital in a market where there are fewer capital providers. I would urge them to call Rick Rule, provided, of course, that they can still spell warrant.